Hi everyone, Donna here. I am the owner here at Bookkeeping Made Simple, and today I want to talk a little bit about keeping good records. The number one thing you can do for your company is to make sure that your financial records are correct and that they're kept current. And for reasons beyond tax deductions, although tax deductions is the number one reason most people think about, and that will constitute the bulk of this video. But we also want to keep records and make sure that all of the accounting records are correct so that you as a business owner can make informed decisions about your business. It's hard to make decisions about improving your profitability if in fact there's no profit to be had and you're scaling up into disaster. It's just impossible to make solid, intelligent, informed business decisions if you don't know how your business is doing. And I call that knowing your numbers. We're going to talk about that quite a bit coming up. So make sure your financial records are correct. And in regards to taxation here in the United States, the IRS requires that business owners keep records for usually 5 to 7 years. It is a specified period of time for each type of document. Part of the reason for that, they just demand it, but part of the reason is that if you are ever audited, you need to have the records available for you to defend your audit. And by that, I mean, they do not have the burden of proof. The IRS assumes that they're right. This doesn't surprise anybody, does it? And you as a business owner are required to create the burden of proof is on you that your deductions are correct. So if you have a record of your transactions, you're ahead of the game. Now, let me back up a little bit. If you know what you spent your money on, it's a lot easier to file taxes to begin with than to just say, oh yeah, $10,000 in office supplies. I think if you don't know what you spent money on, you can't strategize your tax preparation effectively. There's a lot of things that as tax preparers we can do to help you reduce your tax obligations, and we want to help you do every last bit of them. Now, it's illegal to evade taxation. It is not illegal to avoid taxation, and those loopholes are written into the tax code for a reason, and I believe that you should take every available deduction and loophole that there is. What if you make a lot of transactions with debit or credit cards and you don't like carrying around a lot of pieces of paper? Everything really is going electronic these days. So your bank is required to keep your transactions for 7 years. They may not always keep them available on the website for that length of time. Reputably, the good banks do, but not all of them do. But they do have to have them available for you at your request if you request something. So this is 2020 when I am making this video. Your bank is required to keep your bank statements going back to 2013. I personally, however, I suggest that as your electronic statements become available, that you go to your bank's website, download the PDF, and store it for yourself, both on your hard drive and in the cloud so that you have backups. And I'm really huge on backups, and you're going to see why in a minute. What about petty cash and other cash disbursements that you don't have an electronic trail for? That's when it becomes more important to have a written receipt of some kind. And the nice thing is today, again, everything's electronic. You can very easily take a picture of your receipt with your phone, send it to your accountant, then the accountant has a copy, you have a copy, or to take a picture and email it to your accountant, which is what I personally prefer because then it's stored together with the rest of my emails for that client. And in fact, a lot of times, right at the point of sale, you can elect to have receipts emailed to you. Now, this is critical for if you're spending cash rather than money out of your bank account. It's also critical if you are making purchases through a major retailer, not realtor. If you're making purchases with a realtor, we have copies of those. But if you're going to a big box store or you're buying a lot of stuff through Amazon, we need to see what those receipts are so that we can make sure that this is a qualified business expense and not just, something for your significant other. Not that we carry any judgment on that, but we do need to make sure that they're actually qualified business expenses. And the problem with Amazon and Walmart and some of the other big box stores is that they carry everything under the sun. Amazon's smile literally goes from A to Z to proof. They carry everything. And they have, a multitude of sellers selling under the Amazon brand. And Walmart is just almost as bad, where you have so much stuff that's available at Walmart. So in those cases, we really do want to see the receipt if at all possible, just to make sure, because we want to be able, if you ever go in for an audit, we want to be able to provide the documentation for you to defend yourself. So good records allows you to take every allowable tax deduction and there's a lot about taxes that I can talk about, but I think I'm going to hold off on this just a little bit, to make informed decisions about your business and to make sure that your accounting and cash controls are in place. If you don't have really good record keeping, then it's unfortunately easy for your employees, if they're so inclined, to be less than honest. Fortunately, we don't see that very often. If you are interested in improving your accounting and cash controls, please give us a call. Our number is 801-692-0032. We're currently offering a free strategy session to discuss your bookkeeping and tax strategies with you. You just give us a call, see if you qualify. Again, that number is 801-692-0032. It's also in the blog post, which will be on whatever medium that you're watching this on. We're looking forward to hearing from you.